Think you need to be rich to start investing? Think you need to work till you're 65?
Wrong.
Today I'm going to show you how to open a brokerage account and start your path towards financial independence, even if you're starting from scratch. Stick around and I'll show you the exact investing setup that I'm using to escape the rat race. No six-figure salary required. Welcome back. I'm Parnell. If you're tired of trading in your time for money, well, you're in the right place. Today we're going to talk about how to open a brokerage account, how to invest our money wisely, and how we're going to speed up our way to financial independence, or FI. Just a quick heads up, I'm not a financial advisor. This video is for education and entertainment purposes only. You should always do your own research or speak to a licensed pro about investing your money. A brokerage is a tool. They're just a company or a firm that connects you with the stock market. That way you can buy all sorts of financial instruments. Think of it like a gym for your money. Instead of getting six-pack abs, you're getting six-figure returns. Now I can just easily say, sign up for a brokerage, but there's multiple varieties of them. So I'm going to briefly touch on the major four varieties.
All right, we're going to start off with the big guys. These are your traditional brokerages. A couple examples would be Merrill Lynch, Edward Jones, Morgan Stanley. And these are traditional brokerages. They offer personalized financial advice, investment management, a wide range of services through human financial advisors, aka you're going to spend some money. They often charge higher fees, which is going to be commissions or management fees, and they focus on wealthier clients who want hands-on help. But, that is helpful. So second is going to be discount brokerages. These are going to be Charles Schwab, Fidelity, TD Ameritrade. I'm sure you've heard of at least one or two of these. They offer basic trading services, buying, selling, etc. But they're going to do it at much lower cost compared to the traditionals. They usually don't provide personal advice unless you pay extra, but they're great for DIY investors who want more control over their portfolios. Now we're moving on to the newer age, online brokerages, which I know you've heard of a couple of these, Robinhood, Webull, or maybe SoFi. Now they're mobile first, tech-driven brokerages that emphasize ease of use, commission-free trading, and accessibility. So not a lot of fees. They target younger investors and often offer flashy app-based experiences with simple user interfaces. And lastly is the set it and forget it kind, which are robo-advisors. These would be Betterment, Wealthfront, SoFi, and they're going to use algorithms to manage your investments automatically based on what you choose for your risk tolerances and goals. They usually charge a small fee and are ideal for people, of course, again, that want to set it and forget it for their investing approach without talking to a human advisor.
I personally have been using Robinhood for almost 10 years now. It's a great app. It has a simple UI. It gives me the little bit of information that I need, and it's great for being a hands-off investor. Now, if you'd like to give it a try, my link is in the description. All right, now that you know what a brokerage is, it's time to open one. It's easier than pretending you read the terms and conditions. All right, we can break this down into just a quick couple steps. So first of all, choose your platform, make your profile, add your info, add your banking account info, put some money in, and now it's time to pick our stocks. Congrats, you just reached level 1, investor. This is the part where a lot of people get confused because they think they need to throw down some giant lump sum of money to get started investing. You don't need 10,000, 1,000, or even 100. You can start with 10, 5, or even a single dollar, thanks to fractional shares. The size doesn't matter, the habit does. Now, fractional shares is just you buying a portion of a company, just the same as buying a full-size share. So for an example, we'll say Amazon stock is $1,000. You put $100 down, so now you've bought 1/10 of a share of Amazon. And I want you to remember, small amounts today equal big freedom later. Next up, the secret weapon of beginners and pros alike, dollar cost averaging, or DCA. So this is where you're going to be buying a stock, whether it's up or it's down, no matter what, you're getting a piece of the pie. The timing is up to you. You could do $100 every single month, $100 every single week. It doesn't really matter. I personally do a month just to make things not too complicated. The market throws tantrums, you just sit back and relax. Now let's talk about what to actually invest in, because there is a humongous broad range in that capacity, and we're not betting on losers. So it's going to boil down to basically 3 separate areas. Index funds being the first. These are just a broad, low-cost basket of stocks that follow the American market. So I know you've heard of at least a couple of these. The NASDAQ, the S&P 500, the Dow. This way you own a slice of America's biggest companies. Moving on to number 2 is ETFs, or exchange traded funds. These are very similar to index funds because they are also low fee, but they're more like themed baskets of companies. And so these could be retail, energy, whatever. And lastly, blue chip stocks. These are strong, established companies that aren't going anywheres and won't disappear overnight. They're household names that you've definitely heard of: Coca-Cola, Johnson & Johnson, Apple. And they usually are not extremely strong growers, but they're going to pay you very well over the long term. And they might even pay you a small dividend over time. But that's a separate video. This isn't Vegas. We're not throwing darts. We're buying boring, beautiful assets that appreciate over time. Financial independence is built by habits, not jackpots. To anyone still hanging on, I said that I would show you my strategy, so I'm going to show you my condensed play and why. Personally, I use both a standard brokerage account and a Roth IRA, and those are both through Robinhood, just to make my life simpler. For those who don't know, a Roth IRA, individual retirement account, is like a 401k, but instead of paying tax after you pull money out, you pay the tax ahead of time. So once you reach the age, full retirement age that is, of 59 and a half, all of the money that you pull out of your account is tax-free. And that's a beautiful thing. I made a quick graphic, so pause your screen here to see a basic summary between 401ks and Roth IRAs. So you might be wondering why I chose the strategy of both a brokerage and a Roth IRA to pursue financial independence, or to retire early. One of the big reasons is going to be flexibility. My standard brokerage account allows me to pull my money anytime I want, and that's without early withdrawal fees like it would be in my Roth. Another reason, obviously, would be because of the tax-free benefits of a Roth when I actually do reach traditional retirement age. A third reason would be emergency coverage. Now, any money or principal that I put into the account, I can pull out at any point that I want after 5 years, and that's going to be tax-free because we already paid the tax on it going in. Now, the only reason that we would pull this out is obviously for emergencies. We're not going to take away from our future unless we absolutely have to. And lastly, combining these two, so brokerage into Roth, it allows me to reach early retirement because now I can pull money currently, and then I can wait till my retirement age to pull my retirement money. So this gives me a nice safe bridge between the two. I personally don't use a 401k because I don't have the money to invest into a third investment firm, but don't let that stop you. If your job offers one, definitely take a look into it, especially if they've got an employer match. All right, we're almost at the end, so let's just wrap up everything that we've spoke about in this video. Here's the real game plan. We're going to open our brokerage account. We're going to start small if we need to. Then we're going to automize our investments. We're going to invest wisely, not chase hype. And then we're going to grow our wealth for the long term. You're not just investing money, you're buying time. Financial independence isn't a fantasy. All it takes is patience and time. All right, you are officially ready to open your first brokerage account and start investing. Now, I know I threw a lot of financial jargon at you throughout the course of this video, so I time-stamped it. Go back and absorb it at your own pace. Like this video if you learned something. Absolutely smash the subscribe button if you want to learn more, and drop a comment with your financial strategy or if you want to hear more about mine. Till then, keep your expenses low and your investments high. Peace.